today's World Insight, growth and consumption up for discussion at China's ongoing Central Economic Work Conference. Outlook on China's economy in 2025. What are the conference's top economic tools?
Hello and welcome to World Insight with me, Tian Wei. China will hold the annual Central Economic Work Conference this week. The conference will determine priorities for the economic work in 2025. Data from China's National Bureau of Statistics show that China's GDP grew 4.8% year-on-year in the first 3 quarters this year. And several economic indicators have shown a rise in market confidence and business confidence since September. What can we expect from the upcoming conference? And let's loop in our panelists. About the upcoming Central Economic Work Conference from China, in Shanghai, John Ross, a senior fellow at the Chongyang Institute for Financial Studies with Renmin University of China. In Beijing, joining us, Liu Baocheng, Dean of the Center of International Business Ethics from the University of International Business and Economics. Gentlemen, welcome to the program. Certainly, the growth rate of China's GDP is going to be crucial. We'll see how the Central Economic Work Conference is going to articulate about that. Besides that, the latest numbers, Professor Liu, what do you think is the most important significance of this work conference, which is being held every year at the end of it, this time?
Well, the key is how to stabilize our economic growth while we are aiming at high quality growth, because there's quite much of a gap between the economic structure, and particularly the growth levers, versus the new demands for high quality development. And the other is that whether the quantitative easing on a steady pace can really produce the right result desired by the central policymakers. And another key issue would be the unemployment issue, particularly for the younger generation, which is also very crucial. And then the other one would be how do we really revitalize the Chinese rural economy, which is going to be an even stronger pillar by the further application of new technologies. And then social welfare or social security would also be one of the topics.
Let me move on to Mr. Ross. What do you think the significance of this Central Economic Work Conference this year?
Well, 2 things. One is the short-term one is obviously to make sure that the growth target of about 5% is hit. It's basically online for that, but maybe needs to speed up a little bit. That's why the government's launched a stimulus package. So there's sort of short-term factors. The more strategic one is to ensure the transition of the economy towards what it, by international standards, would be a high-income economy. China's almost on the brink of that by World Bank standards, and that will require different type of production, higher value production, etc. That's underway. And then there's what I think are sort of specific immediate ones. For example, the one I would particularly focus on is the profitability of Chinese companies. The private investment will only be sustained if the profitability of companies is good. So that's what you might call sort of medium-term thing. So it's a complex situation. You've got to do with both the short, medium, and longer-term aspects of the situation. That's what I think the work conference should and probably will focus on.
Of course, we're in a very important and also complex geopolitics and geo-trade juncture, with the new administration likely to exert tariffs on different economies. However, we do not know what will be the impact of the tariffs, as we do not know what the policies might be coming from Washington, and how people would accept it and interact with it, and how it will have a bigger impact, not just on the Chinese economy, but also on other economies and also the global trading systems. Having said that, though, what about that issue? How much do you think that is the elephant in the room, hanging in the air, while the Central Economic Work Conference working on China's economic agenda will have to face? Professor Liu.
Yeah, I think China is focused on its own economic growth landscape. So the prospective increase in the tariff by the Trump administration won't really hurt a great deal. It's a matter of how China can really build up a level playing fields for different market players, and particularly for foreign companies to continue to work and contribute to the Chinese economic growth, and also the how the Chinese private sectors are really given the assured confidence to be able to expand their production with now the stimulus package, and also to provide quality employment for people. Right now, we see that in many other countries, the national security consideration is being far more emphasized over the economic growth efficiency, which China is also, having different debates with regard to such sort of issue. But the way I see it, the best security is economic growth. And when people get happy, when companies get happy, you get stronger, and you do not really need to spend so much time to be so protective with regard to your own economic growth and also other national aspects.
Now, national security vis-à-vis economic growth. Mr. Ross, what do you think about that, especially with the hunting of the issue of tariffs?
It's complete fake by the Trump administration. The issue is not about national security at all. I mean, with tariffs in Trump, with Trump, they're not being imposed for national security reasons. They're being pursued, they're being imposed because Trump thinks it will slow down the Chinese economy. The United States has two ways of competing with China. One, which is perfectly fair, and anyway, nobody could do anything about, which is to speed up the US economy. But the US is not willing to undertake the reform measures within the United States, which will speed up its economy. Its growth rate is about slightly above 2%. If you take the last 20 years, it's 2.1%. And they are taking no measures which will speed it up. If China's growing at 5% and the US is growing at 2.1%, then inevitably China will strengthen its position against the United States. But the Trump administration, therefore, instead of speeding up the US economy, is trying to slow down China's economy. It's got nothing to do with national security at all.
How is China going to deal with that reality would be certainly one of the key issues facing up to those attending the Central Economic Work Conference, isn't it? Mr. Ross, what do you think can be China's way out?
It's not the tariffs are not the elephant in the room. Let's call them, Sarah, a medium-sized dog or something like that. In other words, it's annoying and it will be a bit damaging on some sectors, but it's not going to slow down China's economy. It's not an elephant. And therefore, the fundamental thing is what is now China's growth, which is fundamentally driven by its domestic factors and by the fact that China is now becoming a technological leader in a number of industries. For, let's say, the first 35 years, maybe 40 years, the economic reform, China was a technological follower. Now in areas such as telecommunications, green energy, EV vehicles, China's the technological leader. It's dealing with those problems that will decide the effect of China, not Trump's tariffs.
But of course, even with that technological innovation advancement, we also see headwinds. On the one hand, you see a small yard, high fence. You also see a phenomenon. You also see green economy. You also see green industries represented by solar panel, electronic vehicles are likely to face tariffs being exported either to the United States or especially to Europe right now. That negotiation is ongoing. So there seems to be a discount to the earlier expectation of how will these technological innovation work for the benefits of the Chinese economy and its interactions with the rest of the world. Mr. Ross.
The US is imposing tariffs on EVs, and Europe will probably impose tariffs on EVs, but the rest of the world is not going to. So therefore, EVs will have problems in two economic centers, but for the great majority of the world, in particular the rapidly growing global South economies, which are growing much faster than the United States. This is India, Indonesia, Vietnam, Bangladesh, etc. They're not going to impose tariffs. So China may face tariff problems in two sectors of the world economy, but the majority of the world economy will get on with globalization, and China will be able to participate in that.
But our focus now is the new economy, isn't it? The green transformation. So how much potential do you see in that green industry represented by solar panel, which we already see some difficulties, and now the electronic vehicles, which is also experiencing some headwinds. So how do you see, despite of all of this, this industry will be having its potential? How much potential is there for this transformation? China bet a lot on this.
I think the total transformation, this is a transformation that's going to take place over a 30 to 40-year period. We're going to have the entire energy system of the world is going to have to be replaced. For we've had 200 years of reliance upon fossil fuels, first coal and then gas and oil, and this is going to be replaced by renewable energy. So China's in a market which is going to expand for the next 30 to 40 years.
Professor Liu, to you as well. We have seen Chinese businesses starting a new wave of going global. We remember that happened back right after China joined the WTO. After almost 5 to 10 years prosperity, Chinese businesses began to go overseas. But now it's a new wave of that. How would you characterize this, and how much of a potential is there for Chinese companies?
I think you really pinpoint a key word, which is a new wave, because the first wave that took place since the 90s of the last century was more of acquisition of raw resources like iron ore, or timber, or other type of metals that can really supply to the Chinese manufacturing hub. And now this new wave is aiming at to diversify the Chinese marketplace, because by Raymond Verney, a great observer of such a trend, is really a watered down type of effect, because when China is moving up on the technological ladder, much of the labor-intensive industries and even resource-intensive industries are being further allocated to the lower-income countries like Vietnam, India, and Cambodia, and many other African and Latin American countries. This is a very natural international production cycle that is taking place. And the other issue is that Chinese companies are going to shape more of their branding process on a global basis, and also to have access to the high-end buying markets, to penetrate into Europe, into North America. So that's something very important. The other issue is related with the new energy industry, where you see that last year our export to African market increased by 300%. With regard to our e-vehicles, and our solar panels increased by 57%. So this is something that we are really there to diversify the market. And the last consideration is how Chinese companies really are able to circumvent the high tariff that is being levied, which is already still existent within the United States. At the legacy of the trade war launched by the Trump administration. So if we invest into some other countries, particularly along the Belt and Road, who continue to enjoy the general preference of tariff, and Chinese companies can really benefit from that, and at least to mitigate the negative consequence as a result of such a sort of tariff.
Domestic consumption, how to make sure it's going to be strong, has always been a question being asked many years. So Do you see any sign that the Central Economic Work Conference is going to provide some kinds of answer to that, Professor Liu?
In order to have the consumption being boosted, people first need to have a stable and also more promising jobs that are available, and people need to have, in a way, to have the right type of income to be able to purchase. It's not, individual households, they make really very rational decisions, despite of all the stimulus packages to support such sort of increase in the consumption. So this is the key. The other is that the work conference will have to consider how to really alleviate some of the uncertainties, before the households begin to open further of their pocket to purchase more. For example, how they can really be alleviated of some of the burdens over their medical bills, and how to build the right type of pension funds so that people can really have a softer mattress to fall back on if they have some contingencies. And also the education of children is there to be also to be alleviated with some of the tuitions, with some of the mobilities between different localities. And so that can really be able to support the Chinese consumption level.
What can be the way that will make consumers feel, now I want to take out the money and spend? After all, the Chinese save. They really save, even today.
Sometimes in the material in China, they think that demand in the economy is consumption, but that's not true. The demand is made up equally of investment and consumption. So if you're boosting domestic demand, it doesn't mean only to boost consumption. It can be equally to boost investment. But I agree with Professor Liu. The fundamental thing is the question of income. If the economy grows, that is, its production increases, incomes will in general rise in more or less in line with that. People will have a higher income and they will spend more. But if the economy is growing slowly, and their incomes are not going up, then they're not going to spend more because they don't have a capacity to do it. The only way that you can increase your consumption, you can borrow, but which people don't necessarily want to do. And anyway, that can't be sustained for very long because there's a limit to how much you can borrow. And the only other way is for your income to go up. And the income going up depends upon the development of the economy. And that develops on both the investment side of the economy and the consumption side of the economy. So there's a bit of confusion around this question.
But you certainly heard a lot of talk about consumption and also consumption stimulus. Some even call it consumption subsidies, and the list goes on. How much do you see those are likely to be the choices policymakers will make or not, Mr. Ross?
Well, I don't know. We will see. What I know is that that's not actually the biggest problem. I think the key discussion at the moment should be focusing on the profitability of companies. And therefore, the private sector cannot have confidence that it's going to be able to expand, and it will not invest unless its profitability is going up. So I have great respect for China's economy. I've been around for a long time, but I think the big discussion taking place on consumption, but I would like to see a real big discussion taking place on the profitability of companies, which I think is the real biggest single problem in the economy at the present time.
I totally agree with John because because the consumption is really the natural outcome of economic growth. And by boosting economic growth at the moment, we have a lot of money that is in circulation, but much of it, I should say, is speculative in nature. They are not really translating into productive forces, not to mention high quality growth or high quality productivity. So this is the key that the government needs to really to address, to provide the right type of leverage and mechanism, institutional setting to give the confidence to private investors to turn the money into, to expand their assembly lines, to move forward for innovation so that they can hire more people. And if they hire more, high quality people, particularly university graduates. So now this is not happening, at least on a larger scale.
there has been a lot of talk and also measures about forming what some call to establish a unified national market. And that, of course, can be very attractive for whether it's foreign investor, domestic investor, and the list goes on. But so far, what are some of the obstacles we still see on the way to build that unified national market, Professor Liu?
First, it is really the entrenched interest that is expressed on two levels. One is on the regional level, because different local governments have their own different interests. They want to, for example, to keep companies that are continuing to reside over there and contribute tax, even if the companies wanted to reallocate to some other places. And the other would be the unequal level playing fields between different companies. For example, right now, the Ministry of Finance produces a new proposal, which is pending for public opinion. In government purchase, they gave more of the 20% credit for local productions instead of giving it to foreign companies importing into China. And so the
but according to the latest version I read, the so-called production in China can include any of those coming from whether it's foreign company or private company or public company, as long as they are doing it in China, right? We just want to clarify this.
Against the government procurement, the agreement of the WTO with China is really actively seeking its membership, and also that's also against the CPTPP, where China is also seeking the membership. So different ministries have different views over this one. So I hope that they need to be able to have a second consideration over such sort of practices. And the other is that the judicial issues, because different regions have different judicial practices, how they can really interpret the law in order to be able to deal some of the contractual issues. And the other one is that many of the local governments, because of the heavy debt, they cannot really pay the contractors from the private sector, and that created a lot of companies, or particularly smaller companies, to default on the other contracts.
Okay, Mr. Ross?
Well, yes, I agree with all these restrictions, but there is another one, which is in order to have efficient division of labour, I think it's incredibly important to have a strong, unified national market. I mean, ever since economics was founded by Adam Smith, the possibility to have division of labour is one of the key things for the development of productivity. But to do that, you have to have material conditions. There is a bit of a misunderstanding in China. I sometimes hear people say that China's got enough infrastructure, but I have to tell you it hasn't. I mean, I was in charge for 8 years of London's economic policy. London is the only city in Europe with equal productivity to the United States, and it's still considerably ahead of even Shanghai and Beijing. And I'll tell you, almost every meeting that I had with business people was demand for more infrastructure. It changes in infrastructure. They needed more developed ICT infrastructure. They needed more infrastructure to get people from the airport rapidly to the business districts, that type of thing. So you have both the removement of the restrictions, which Professor Liu referred to, and things of that type. But second, you've also got to create the material conditions in which efficient exchange and division of labour can take place within the economy. And quite honestly, this is a misunderstanding of the situation in China. The view that China's got enough infrastructure is simply not true.
Recently, we have been seeing one after another stimulus policies coming from Chinese policymakers to make sure that China will still be a very attractive marketplace and also places to do business, and also to make sure that the Chinese consumers will feel safe to open their pocketbook. What do you make of these stimulus measures? Are they likely to make their impact soon, or the effect of it will only be incrementally felt for the next few years? Professor Liu.
The answer is lies in how the stimulus packages are going to be further distributed to touch upon the real productive issues.
Mr. Rouse, the same question to you. Brief answer, please.
Well, I see the key thing via the need to increase the profitability of the companies. One measure which is very good in that is the reduction of interest rates. I wrote an article 6 months ago arguing for reduction of interest rates because that will improve the cash flow of the companies. Then you need certain stimulus. I'm in favour of a moderate consumer stimulus in the present time.
Okay.
And you need government investment. These are the key measures that need to be taken, and they can produce, let's say, in a 6-month period, a reasonable effect.
John Ross, Liu Baocheng, gentlemen, thank you. And that's all the time we have for today. If you'd like to know more, search World Insight or check out our YouTube channel. Follow us on X and Facebook. I'm Tian Wei. On behalf of the team, thanks for being with us. Bye for now.